Time for hot picks. Our guest has French aerospace and defense company Safran as his top selection. We're joined by Ken Herbert, analyst at RBC Capital Markets. Thanks very much indeed for joining us. I was just checking Safran's website. They sure are diversified. Drones, missile guidance systems, body armor, you name it.
Yeah, thanks, Andrew. I mean, it's important to keep in mind that for Safran, approximately 80% of its sales are commercial aerospace.
Okay.
It is a leader in aircraft engines, and obviously the services associated with that. So it is expecting to see a doubling of its equipment defense sales in Europe, which we think obviously gives investors good exposure to European defense spending. It has, of course, a broad portfolio, but very commercial aerospace focused as well, where we remain very bullish on the fundamental outlook, both for new build aircraft as well as for the aerospace aftermarket.
Right. And, that's interesting. So it participates. Sorry, what kind of civil aviation engines does it make?
Yeah, so it is a 50-50 joint venture in CFM International, which provides predominantly narrow-body engines. So think about the engines on about 60% of the A320 Neo fleet and about 100%, obviously, of the Boeing 737 MAX fleet. That's what it's most well known for. It also produces parts for wide-body engines, as well as, to your point, a host of business jet and military engines or propulsion systems for helicopters, for aircraft, obviously, so across the board. But on the commercial side, smaller narrow-body aircraft engines are perhaps what it's best known for.
RTX, big in missiles, used to be Raytheon or part of Raytheon. What attracts you to this stock?
So RTX, we really like the mix, again, about 50% commercial, 50% defense. Within its defense business, its book-to-bill was over 2 times in the most recent quarter. It is the number one supplier of missiles here in the United States. So when you think about major new program starts like Golden Dome, you think about a lot of the restocking effort that's happening in the United States. It's a direct benefactor of that as well. And certainly when you think about international sales for key products like the Patriot missile, it's very exposed to that. So we think it ticks a lot of the boxes in terms of where we're seeing growth in defense markets, where it's very well positioned. And again, it also has significant commercial exposure. And we like that diversity right now because we do think we are seeing growth continuing on aerospace, certainly into 2026. And we like the portfolio mix within RTX very well.
And so again, they are a play on both civil. They have a civil franchise.
They do have a civil franchise. They obviously own Pratt & Whitney, which makes a number of civil aircraft engines. They also, of course, own Collins Aerospace. That and Raytheon are their 3 main segments. And Collins is a big diversified supplier of aerospace products, for everything from seats and galleys and interior equipment up through all kinds of systems and avionics and elsewhere. So again, diversified play, but we do think the defense piece within RTX is really where we see the most upside into 2026.
And then finally, a company called Loar, L-O-A-R. What do they do?
So Loar is a small component supplier, predominantly 70% commercial aerospace. They do everything from seat belts and other systems on commercial aircraft, predominantly a play on the aftermarket. So that is the majority of their aerospace sales. They do have about 25% of their revenues as well from business jets. But Loar significantly benefits from new product introductions, which has enabled the business to outgrow peers. But I think most importantly, it represents a way to play what we expect to be continued consolidation in the aerospace marketplace. The company has announced a significant acquisition that should close here in the near future, and we think future acquisitions will help the stock reverse what's been, as you can see from the chart, a bit of a sideways move over the last 6 months. But we think Loar as well on the small cap side is very well positioned.
I mean, could you generalize, over the years, have U.S. defense stocks been decent investments, or are they cyclical, or do they rise and fall with the political winds?
They've tended to be cyclical, right? In fact, in some ways, they're counter-cyclical with the broader economy. We like to say defense stocks are defensive. We do think, even though we're seeing substantial growth both in the United States and internationally in defense spending, they will remain cyclical. And there are a number of competitive pressures, and to your point, political factors that influence, obviously, sentiment on these stocks. So they are certainly cyclical. They'll continue to be cyclical. But we like the outlook from a fundamental standpoint now in terms of defense spending globally, and of course, certainly in the United States.
One name that always comes to mind when I think about defense is General Dynamics, GD, the maker of the Abrams tanks and lots of other defense systems. And that stock sure has had quite a good run over the past 10 years. I'm not sure if we can show a 5 or 10-year chart.
Business perhaps best known here in the United States as well for its Gulfstream business jet franchise. And I think the outlook for business jet travel has certainly seen some pickup here in 2025. I expect that to continue in 2026. Gulfstream, very well positioned at the upper end of the market, right? So specifically with corporate travel and high net worth individuals. So, and also, of course, to your point, very strong franchises in shipbuilding and in combat systems as well, which are both in relatively good positions as we think about broader defense spending.
Would you be a buyer of General Dynamics right now, or are you less keen on that stock, Ken?
We're less keen on General Dynamics right now. We've got a sector perform rating. We prefer RTX for sort of prime exposure here within the defense side.
Thank you very much. Really appreciate it.
Thanks, Andrew. Happy holidays.
Yeah, you too, Ken. Ken Herbert, analyst at RBC Capital Markets.